What's going on, guys? Welcome into episode number 6 of the Ask Tony Show. We were able to pump out one last show before the end of the year, so let's get into it.
Would you rather save up for a down payment or use Utah housing?
Down payment, you have to have it, guys. I've talked about this before. I don't know how many times I have to say it. You have to have a down payment. Well, no, that's wrong. You don't have to have a down payment. You should have a down payment. It's the financially smart thing to do. What a lot of people sometimes get confused with is they think that programs like Utah housing, programs like grant programs or things like that it's free money, that you don't need to bring a down payment, that it's not necessary. And that's completely false. Number one, you're always going to need to bring a down payment. The thing with, for example, a program like Utah housing is the Utah housing program is going to lend it to you. So you're going to have a big loan for your mortgage and you're going to have a small loan for your down payment funds. But you're going to have to pay that back. And the interest rates are ridiculously high. And it's just not a sound financial decision to borrow your down payment funds at that high of an interest rate. The same thing with, for example, grant programs. Grant programs can be great, but they have a ton of rules. They're going to limit you on your buying power. They're going to have, for example, there's one in West Jordan. It takes 45 days for you to get your funds. I mean, just a number of different things that could put you in a tough spot when it comes to finding the house that you want, especially when it comes to winning offers. So it's always better, even if you have to wait. I tell people this all the time. I'd rather you wait 6 months and sell a car or do something to get your down payment funds instead of using a non-down payment program that's going to charge you a ton of interest. The home that you're going to be able to buy is going to be much lower quality for the same price. And when you run the math, guys, when you look at the numbers, it's just not smart.
What is the biggest obstacle home sellers face today?
So selling a home in Utah for the last 3, 4, 5 years has been pretty easy because of the market. So when you're in what's called the seller's market, which is what Utah is still right now to this day, what that means is that there's not a lot of houses, but there's a lot of buyers. So there's a lot of demand for your homes. So what that does is that it creates an environment where when I put my home on the market, if I price it correctly and if the home's in good shape, I'm going to get a bunch of offers right off the bat. So the tough part with sellers is being realistic about what your home is worth. I've had a lot of conversations with sellers in the past, and because there's so much demand, what a lot of buyers will do is they'll offer more for the house. Like, let's say you list your house at $350,000. And when I go to list your property, I'm going to do some market research. I'm going to see kind of what similar homes are selling for. And I'm going to give you my recommendation on price. Let's say $350,000. So we list at $350,000, and because your home is in really good shape, you start to get a bunch of offers. All of a sudden you have 8 offers. So what a lot of agents will do is they'll offer $355,000, $360,000, $365,000, $370,000, and it kind of becomes a bidding war. And the mistake that a lot of sellers make is all of a sudden now they feel like their home is worth $370,000 or $380,000 because they have high offers, and that's not always the case. You have to remember that at the end of the day, what actually determines your home's value is the appraisal. And so a lot of sellers sometimes they tend to get greedy and they pass up on good deals because they want more and more and more money. Or they'll take a higher offer, and then when the appraisal comes back and it says, hey, guess what? Your home is actually worth $350,000, then they throw a fit and they're not happy. So you have to be realistic about your property and not get greedy. If you get greedy, you lose.
Do you get upset when friends use another agent?
I used to. When I first started out, I did, and my broker at the time really quickly got rid of that just from the root. Like, all it is entitlement. And this applies to real estate agent, or it applies to people in general. When you feel that you deserve something just because you are who you are, you set yourself up to lose. So in my case, I got my real estate license. I was young, I was motivated, I was excited. I was posting on social media. So people knew that I was an agent. And then all of a sudden I would see friends or acquaintances post pictures of them buying their home or whatever. And it did, like, I'm not gonna lie, it bothered me for a long time, because I would say, shoot, like, we're supposed to be friends. And it even happened with family members. Like, we're supposed to be friends, family members. Like, why don't you use me? Like, do you not like me, or are you fake? Like, you start to get all these negative thoughts. But what I learned was, I hadn't put in the work to get those people to trust me. I hadn't really made an approach. I hadn't made a connection. Even though we were friends, I hadn't made a connection on a professional level. And you have to separate both things. It's one thing if someone's your family member, but do they have a professional connection to you? Do they have a professional trust towards you? Many of them, they probably don't, which is normal, because first of all, if it's your family member, they know you. They've known you forever. They know your flaws. They know that whatever flaw you may have, they know that you, whatever it is. And so sometimes it's tougher to build those bridges of trust because they know you. But the problem that a lot of people have is they feel like they deserve it just because. Just because I have a real estate license, everybody that knows me should use me, just because. And they're not willing to put in the work to build those bridges of trust. And when somebody uses somebody else, they get upset. So initially, yeah, but it was something that I had to get over. And now, honestly, if I see a friend use somebody else, I'll congratulate them. I'm genuinely happy for them, because there's a lot of agents. And as I mentioned in a previous video, like, there's a lot of abundance. I mean, everybody can eat at this table. And if somebody used somebody else, it's because the person that they used put in more effort to help them or to get them through their pipeline than I did. And so in that case, it's on me. And if I lost, it's because I deserve to lose.
Is it better to build a house or to buy a house that's already built?
It depends on what you're looking for and the type of person that you are. Building is a cool process. I've walked through, dozens of people through that process, and it's cool because you get to pick your layout, you get to, pick your upgrades. There's a lot of things that you can choose. You can choose the color of your house, you can choose the color of your floor. I mean, there's a lot of things that you can choose, and a lot of people like that process. When you buy a home that's already built, you kind of just have to take what's already there. Now, the pros and cons to building are, let's start with the cons. The cons to building a new property is, number one, it takes forever. So when you start building your home, it could take 6, 8, 10, I've seen up to 12 months for your home to be completed, depending on the project. So you have to be patient. That's number one. Number two, when it comes to your financing, the way the majority of lenders work is, let's say in January, you start building, you get under contract. Your home is going to be completed in October of 2020 or whatever. Your interest rate is not going to be locked in until October. There are a couple of lenders that have exceptions, but it's expensive. It's expensive when it comes to closing costs. So you don't know what your monthly payment is going to be. In most cases, you don't know what your interest rate is going to be, and you don't really know when your house is going to be completed. A lot of builders, they either get backed up or they're a couple weeks behind. By experience, they're always a couple weeks behind. So you don't really have a moving date. And a lot of things can happen within 10 months. For example, if you all of a sudden lose your job, you don't qualify anymore. So there might be non-refundable deposits. There might be things there that can make it really difficult to get out of a contract. So everything has to go perfect from January to October. Your credit can't go down, like a bunch of things that, life happens. And so it's kind of risky, but if you can pull it off, then you'll have a brand new property. When it comes to buying a home that's already built, you just get it faster. I mean, at the end of the day, you can close in 30 days, you can have your home, and you can protect yourself against things like damages, things like, if things stop working, with home warranties, with things like that. So the majority of people choose to buy a home that's already built because the process is much easier. Then again, some people want a new home. And if you want a new home, then just make sure that you hire somebody that knows what they're doing so that they can guide you through that process.
How can I get rid of my mortgage insurance?
So mortgage insurance is very expensive, and it's made buying homes much more difficult for a lot of people because they can qualify for less. So really quick, in a nutshell, mortgage insurance is just that, mortgage insurance. It insures your mortgage. So if you stop paying your mortgage, if you lose your property, then there's an insurance policy that pays what the bank lent you. And so the way that you can get rid of it, there's really one way. There's actually two, but the second one isn't very common. The first one, and the main one, is you have to have at least 20% equity in your property. So if you give a 20% down payment when you buy the house, then you never have mortgage insurance. It doesn't exist. If you give just a normal down payment, if you use FHA, it's 3.5 or 5% or whatever, then once you have 20% equity in the home, you can refinance that property and get rid of the mortgage insurance. Okay, now here what's really important is what program you're using. If you're using a conventional loan, then you can get rid of it once you have 20% equity. If you're using an FHA loan, you have to have it for the life of the loan. So what a lot of people will do is, because FHA is a cheaper program, cheaper in terms of interest rates, better in terms of ratios, lower down payments, a lot of people start off with an FHA loan, and then once their home reaches 20% equity, they refinance to a conventional, get rid of the mortgage insurance, and their down payment and their monthly payment, can go down $200, $250, $300, like real substantial differences. So if you're a homeowner, ask yourself, what program do you have? And if you have an FHA, you have to keep an eye on the market. And once your house reaches 20%, you refinance to a conventional, you get rid of the mortgage insurance, and you save some money.
Is there a benefit to buying a home during the holidays?
Christmas home shopping. Christmas home shopping is something that is super exciting. It's one of my favorite seasons because there's always like that Christmas element. Like, I'm gonna get a home for my Christmas present, or it's for my family. Like this year, we're not getting presents, we're getting a house type of deal. So it's super exciting, but it does have its pros and cons. And it's not just holiday home shopping, it's winter home shopping. And because we're in Utah and this time is winter when it's cold and there's snow, there's some pros and cons. So the good thing about buying during the winter is there's less competition. So a lot of people, once you hit October, November, the holidays are coming along, if they haven't found a property, they'll just wait. They'll say, well, I'll just wait till next year. That happens to a lot of people. So a ton of buyers drop out of the market and there's less competition. What does that mean for you as a buyer? It's a lot easier to negotiate certain things. You're not in so many multiple offer situations, for example. You can negotiate closing costs. Sometimes you can negotiate lower prices. You can get home warranties. You can get repairs. You can get a lot of things because there's not so much demand for the property and you're not competing so much. Even when you send an offer, now we're sending offers asking for full closing costs and we don't have to increase price. So that's the benefit, that there's not a lot of competition. The downfall is you got to move in the winter. And a lot of people don't like moving when there's snow, but if you can manage that and if you can make it happen, you'll get a much, much better deal.